hurt people's feelings. Of course, that's my goal in life.
Welcome to this episode of Revenue Generating Hour, RGA Network's members-only podcast. I am Matt Coots.
I'm John Gaston.
I'm Chief Marketing Officer of RGA, and I am joined...
CMO.
CMO, yeah. I'm joined by Mr. John Gaston.
Head dishwasher and bottle cleaner.
There we go.
That's what I am.
All things RGA can be found on rganetwork.net. What's that URL, John?
RGA.net.
RGA Network.
Oh, yeah.
Oh, my God. It's been a long day.
It has been a long day. You have no idea.
It's the Monday of Mondays. And we are joined by my good friend and fellow RGA member, Ryan. Ryan, introduce yourself, my friend.
How y'all doing? Ryan Liszeski, Champions Mortgage, fellow RGA-er, as Matt mentioned.
Yes, there we go. Also a fellow Ohio.
Oh, here we go
Ohioan.
with Ohio. Ohio.
So, yeah. And they had a good weekend, whereas the rest of my football teams did not.
Yes,
so that was
they
sad.
did have a good weekend, actually. I actually watched some of that.
Yeah, they had
Not
a good
lot,
weekend.
but some of it. Yep.
Tampa Bay lost. The Browns lost. I mean, Browns
Dallas
always
won.
lose. Let's face it. It's hard to be a fan when there's nothing to root for.
Dallas? Root for Dallas.
Yeah, I guess I could root for Dallas.
Absolutely not.
More of a
Don't
Saints
root for
fan.
Dallas.
More of a Saints fan than a Dallas fan.
We got to end this podcast now.
So, Ryan, as you may have figured out, this is a podcast that you are invited on as a member, and we're going to have some fun. But we're also going to talk a little business. So you're in mortgage, particularly you are in residential mortgage. So tell us a little bit about like how you got into the business.
I was going to ask that.
Yeah.
What makes a sane human being get into the mortgage world?
Oh, that's a good one. Do you want to start there? Because we were talking about your history.
That is a crazy industry.
But here's the problem. If he's not sane, then we've got that on film. That's okay. Tell us. I'd rather have proof.
Right.
Go ahead. Tell us like how you got into the industry. I know your family. You've got some family in the industry over there. So let's talk about Champions Mortgage. What brought you to town? All that.
I think Matt hit the nail on the head to kick it off. Is what really takes a sane person to jump into the mortgage industry is really the question. I've been down in Florida about 13 years now. Chased a dream of just riding motorcycles and being living on the road. And my brother-in-law, I proposed to my wife, and my brother-in-law asked me, "Hey, do you just want to be a bum the rest of your life?" And I said, "Well, no, that would not be my goal." And he said, "Well, you can come be a loan processor." And I said, "Listen, man, I don't even know how to spell mortgage." and that was 7 years ago. Last year, I switched from operations and processing to originating because a lot of my friends were buying houses, and I wanted to help them get to their next level of wealth in home ownership. So it's been a crazy ride. I love every second of it. Helping people build generational wealth is a huge passion of mine. Whether it's your first house or your 50th, you're changing your life as it goes down your family's generations. So it's a pretty cool gig for the most part.
John, can I tell you one of the things that I absolutely love about RGA?
What's that?
How much everybody is like service oriented.
Yeah.
I mean, realistically, we've interviewed some great people so far, from Christiana Carter to Freddie Rapina, right? All of these people, to Lindsay White, to now Ryan. Like, everybody that we've interviewed just has like a heart for service. And that is a significant part of their mission and cause. And I love seeing that, especially since Ryan is also heading up our ambassador program for RGA.
Oh, nice.
Yes.
I did not know that.
Yes. See?
See what happens when I miss a couple of meetings? I don't know what the hell's
Like
going
everyone. Just kidding.
on.
So we just started rolling out the ambassador program. We're going to have a couple ambassadors that are really dedicated to like the local communities around each of our groups. And Ryan's helping to voluntarily head that up.
Thank you, Ryan.
Yeah.
Voluntold is a good way to put that.
Voluntold.
You didn't show up for a meeting, did you?
Oh, yeah. I kind of roped
Ryan's
him
not
in.
here. He's our new ambassador.
He's the new guy.
Last person say not it. Oh, Ryan's not here. Oh man.
Well, Ryan, hey, do you want to be it? Not it. Well, too late there, buddy.
When you think about it, though, like realistically, I think that is one of. I mean, we're doing so many things to expand RGA. From RGA Speaks, which we're hosting here at the lovely Area 52 Media Group home office studios. We're hosting since we had to reschedule because of Hurricane Ian, as
Ian.
Mark has been calling it.
Oh, he has really?
He does not listen to me when I say it's Ian. He's like, it's spelled Ian. I'm like, okay. So we had to postpone that to this coming week. So we're hosting it here. And it's going to be fabulous. Like, it's going to be really strong. We've got the theme is Notepad to Launchpad for the second month of RGA Speaks. So all these different things we've got going on, from RGA Speaks to improved business builders based on it, to RGA University is coming, to ambassador programs, to shifting to a 3 leadership model inside of the groups, to, creating these connections in the communities. It's really, there's a lot going on at RGA right now, and it's really fantastic.
A ton.
Yeah, it's good. That's good. So Ryan, let me ask you this, man. Obviously, you've been in the business now 7 years-ish,
Right.
a little bit plus. You were on the back end, then you switched to the front end.
Yep.
Tell me a little bit about what attracted you, because you are a heavy networker. So what attracted you to RGA?
So RGA seemed really different in a lot of aspects. B&Is are pretty rigid in how they're structured. There's only going to be 1 or 2 originators in that room. There's only going to be 1 or 2 realtors in that room, and that's just industry specific. So even outside industry specific, you're only going to have 1 or 2 people. RGA seemed way different than that, and it really gave me a network where I could go, instead of B2B, from where I'm talking to realtors constantly, trying to earn their business, where I could go B2C and meet those consumers right where their needs are, really. Whether it's their purchase or they need to refinance because they're in a rough spot, or maybe they need to put a roof on. I'm going B2C and meeting them right where they are in their business, right? A lot of self-employed people have come out since 2020. RGA seemed like a wonderful place to really jump off and hit that network hard, and find different entrepreneurs who are also trying to build their business and be different.
Speaking of, there's 2 other things I forgot to mention that are happening like literally this month. One is tomorrow, the RGA Women's Council. Have you talked to Heather yet?
Yeah, but
because Heather should be involved in the Women's Council.
Yeah,
that's pretty exciting.
I can make that happen.
Yeah, you should mention that.
Here we go.
We have a busy we have a real busy week too, because we're doing speed networking on Thursday. We have a quite, and then I'm a part of Pro as well, so they have Food and Wine Fest on Friday. So it's already it's a bear of a week, but that's okay.
There you go.
It's okay. No, and Matt said, I'm like what I tell people. I'm a serial networker. I love meeting as many people as possible, in their own arenas. Is really where I like to be.
Well, that's something else that's different with RGA too, is, we don't care how many organizations you're in. Technically, we want you to be networking in the community because we want you to bring people to this family and get them, just as addicted to the RGA concept as anything else. I mean, the opportunities for you to get just exposure and access to, we're the only networking company that I know of that has their own best-selling book. Yep. Like, we took 50 people and made them best-selling authors on Amazon. Like, who does that? We're getting ready to do it again, though. So that's going to be exciting. But, so it's like all these events, these resources, the different things. So we've got the RGA Women's Council. We also have a business council coming, which is going to be a once-a-month thing, and it is only for business-to-business people. So one of the comments that I got in feedback over the last 8 months or so was, I'm a business-to-business guy. I'd really like to have access. He's like, I know that I can get some business from going all these meetings and stuff, but it's more of who do you know? It's not of, can you help me? And there's nothing wrong with that, because at the end of the day, RGA is not a prospecting group. It's a relationship building group.
Right.
So we want you to build those relationships and not look at it as who's in this meeting, but who do those people potentially know. But if we had a business-to-business group that was really focused on sharing connections and helping to build, and just as a once-a-month type of mixer too, like we're just going to do like a once-a-month thing. So, but yeah, that was something else that's going on. And Ryan, obviously, you'll enjoy that one. So.
So
Yeah, no, for sure, absolutely.
How
I mean,
is
if
the mortgage world?
upside down is a good way to put it. Upside down.
As of today, October
it was
3rd.
right. It was right side up for a good while. I know you've had Lindsay on here before. Lindsay's awesome for hard money. That's a huge sphere to run into with mortgages right now and residential. It's a lot of up and down. Realistically, some people are realizing that they can't afford the house that they once could afford 3 months ago, and they should have purchased.
Right.
As interest rates fluctuate, they're going to go up and down. It's never a bad time to purchase. However, teaching someone that is a very hard asset to own. It's not a car, right? It's not going to depreciate tomorrow. It should increase your value of your assets over your lifespan, or the average time you're in the home is 5 to 7 years. So how much money could you make off a vehicle in 5 to 7 years? Nothing, right? You're just going to lose. So buying a home, and building equity in that home over 5 to 7 years is something that we're always trying to teach people in that aspect.
For sure.
I kind of know a little bit of the answer, but I want to get your perspective on it. So all the insurance issues, the woes that we've got going on, and now that we've been hit by one of the top 5 strongest storms ever to hit the United States, what do you think that's going to do to the housing industry, especially them getting the mortgage side of it?
You mean the insurance side?
No, because if you can't get insurance, you can't get mortgages, and
right.
and if you can get insurance, it's going to be 5 times what it's going to be worth. I mean,
right.
Back in the day, I remember when we bought my first house, it was $700 a year. Now insurance is getting up to the point where it's $3,500 to $4,000 a year.
Well, carriers were already leaving Florida in record rates. I mean, what was it,
I don't know what these guys,
that left this year?
Ryan, he looks like he's healthy, but he could get skinny real quick.
He could get skinny
I'm already
real
skinny.
quick.
You'd be surprised.
There we go. So what do you see? What do you see happening because of that? Yeah.
For insurance question, please call Daryl Stidham at iInsure. He's a great resource to help you figure out how to either bring your premiums down or get you into the next home and get you a good premium for that. With insurance, especially with a storm, it's super interesting because your deductible is anywhere from 2 to 5% for a hurricane. So if a fence panel falls down and it's going to cost you $1,000, but you're trying to put in a claim, well, on a $300,000 house, it's a pretty expensive claim for a fence panel, right?
Right.
So it's just teaching people, again, a lot of education right now for mortgages, insurance, everything in that sphere. It's a lot of education, even for real estate agents at this point.
Wow. Well, so explain the box. Because a lot of people go, this literally, I heard this yesterday. Okay. I couldn't do anything on my house, and I was in the middle of it because they kept saying it's in the box. It's in the box. It's in the box. Do you know what I'm talking about?
Yeah. So once realistically, once there's a state of emergency pushed onto the state for any of the counties, they're not going to be able to bind any insurance, right? And you can't make any changes to your policy. So if you're buying a house and you're in a flood zone, you're certainly up a creek. You're going to have to push your closing out until we're out of that state of emergency.
Hopefully you're not literally in a creek, though, because that would be bad.
and then another thing that a lot of people don't realize is that when you're buying this time of year, right, storm season, we're always going to have storms, is you're going to have to get the home you're purchasing re-inspected by the appraiser. So it's going to cost you extra money with that. Sometimes a lender will cover it. Like usually we'll cover those. Maybe it's $100, $150. It's nothing too crazy. However, they'll have to get it re-inspected. I have one guy who argued with me about it, and I said, it's going to happen. You're not going to have a choice. Any lender who's lending you $300,000 is going to want to make sure that that home is still exactly how it was a week or two ago.
Right. That makes sense. And that's just... Yeah. Welcome to Florida and storms. If you live down
south, it's like, there's no house anymore.
There's no house. Huh?
Yeah. I mean, I have people in Bradenton in that spot right now.
I know this is probably a Daryl question, right? But if it's already bound and you're literally like 2 days away from signing paperwork and this stuff, is it covered?
So if you haven't closed on the house, it's not yours yet.
It's not. So it's
you have to have
the other
insurable
owner.
interest.
Okay.
Yeah.
I just always wondered about that.
No, you have to have the insurable interest, and then
did they not pay their insurance bill because they knew they were selling?
Right.
That'd be huge. That'd be terrible.
That'd be terrible. Oh my God. I'm sure it happens. Okay, so let's talk trends. I mean, we got about 12 minutes here,
Yeah.
so let's talk like trends as far as obviously we just came out of a period of the market just being hot, right? Just
Right, you had 2
houses
years of
flying off.
2
the
years of
market.
easy money, right?
Yeah.
A lot of people jumping into the game just to make a buck, transactional. Couldn't even remember who their last buyer was. Never went to a closing in their life. We're just too busy to where actually before this call, I had a call with another friend of mine who's been originating for about 20 years, and he goes, "Man, if you close 2 loans a month," he's like, "It's a great month now." Where
It's back
6
to
months
the old
ago-
days.
Yeah, so 6 months ago, if you weren't doing 10, 15, 20 loans a month, you weren't doing anything.
Right.
So it's a bit different, right? It's pushed a lot of people into different facets of life where they are either getting out of this game completely, or they're relearning how to actually have a conversation with somebody and actually really work through that deal. In the aspect that maybe there's some question marks in their income, or maybe they don't have all the assets and you have to go for down payment assistance. There's a lot of different ways to skin a cat when it comes to purchasing a home. It's just now you have to actually think. So it's pushing a lot of people out. The rest of us are sticking around, getting you into those houses that you want to actually own.
And wouldn't so I feel like the people who are probably taking the biggest hit here is the realtors, the agents. Like
There's also
then the mortgage brokers too, right? Because it goes downhill, but like they're having to probably go out and hunt a lot more, and really try to get buyers into these homes a lot more.
For sure. And then you figure on the opposite end of the spectrum, right? The listing agent, right? Some of these houses are on the market now for 3 months, 6 months. What does that seller think about that agent, right? They think they can't do their job, which is not the truth, right? Probably far from it in a lot of cases. So realistically, now you're trying to educate sellers. How do you get the buyers in the house? Okay, well, what can I offer to a buyer, right? So FHA loan, you can get up to 6% seller credit. Perfect. That usually covers your closing costs, and it also gives you an option to lower your interest rate with some of that money as well. So you're trying to tell sellers, hey, don't lower the price. Let's see if we can offer, some sort of credit to the next buyer who puts an offer in. So there's like I said, there's different ways to do it.
So innovative solutions and strategies are becoming. It's funny, right? It goes from transactional to
Relational, overnight.
To what can you actually do for this person, and why should this person do business with you?
Right.
Not just because of a number on a loan.
No.
Right.
And even for me, and that's why you see, look at the trends. Look up Better Mortgage, right? Better Mortgage pretty much fell off for a good while this year. They were doing a lot of transactional business, and then once it kind of fell out, they also did as well. Look at Zillow. Zillow's costing how many people so much money because they bought so many properties,
right?
And they can't offload them fast enough. So it goes back to relational, right? It goes back to the, hey, let's meet and have a coffee and have a conversation about how I can help build your wealth at the end of the day. And I think that's where it should be always, right? So you get that all the time. They're like, oh, this could be a super transactional business in the aspect that you can go on, Matt, you could go online right now, fill out an application, have someone pull your credit. They'll send you a pre-approval. Is it correct? That's for you to determine when you put the offer in and you go through underwriting. Or for me, I'm going to check everything, pay stubs, W-2s, your assets. I want to know everything about you and then some to make sure that when you go to an underwriter, you're set. We're not even going to have a question mark. So.
Right.
Yeah, here's a piece of trivia for you. You know who the biggest
I hate trivia.
The biggest mortgage writer in the United States is right now?
The U.S. government?
No.
I don't know. I just thought that was a good answer.
NerdWallet.
NerdWallet. Really?
Yep.
I wouldn't doubt that.
They NerdWallet. They feed it to Rocket Mortgage and people like that. Okay. And those are people like Ryan. When you go meet with Ryan, you get to sit down with Ryan, right? You get down and you have a conversation. Right. Most of the time, those guys are in Minnesota or Wyoming or Texas, and you never talk. You never see them.
Right.
And they're just spewing crap that doesn't even relate to you. Okay? And that's,
right, or they're just trying to push through their portion, right? So that guy's an order taker. He's going to take your application and pass it off to the next person. And I always tell people on their first consultation call with me, I go, you're stuck with me from now until the day you close, and even then some afterwards. Right. Even though I might have someone help me, a processor, a loan assistant, they're there to help me, but I'm still there for every question and answer you're going to need. That doesn't change.
And that's why Ryan Ryan at closing, his closings close. And with those
Right.
other people, they get to closing and all hell breaks loose, and it's like, oh crap.
Right.
Yeah.
Yeah.
It's a wild time. So I tell people it's super wild because look at NerdWallet, right? Doing really good for what they're doing. And I could probably conceivably buy those leads as well.
Right.
If I wanted to. I'm just not in the game of purchasing someone's business. I want to earn their business. I want them to like me and, as we say at RGA, know, like, and trust.
Right.
And if you're not doing that in this industry, then you're probably not going to last very long.
Nope.
Well, that's why I always say RGA is relationship driven, right? So it's literally about getting, and that's why we're so we're so big on this model of really when somebody joins RGA, one of the things that I see happen all the time is they come in hot, they go to 400,000 meetings, and
I did that
in like the
That was
first month, and then they never go to any more, right? Because they're just burnt out, or they didn't see a return for all of the effort that they put in. But what they're forgetting is that there is a timing factor where people are actually comfortable with you over time. Just because you crammed more meetings into a shorter amount of time doesn't mean that people are automatically going to be like, oh yeah, this is my person from now
Right.
on. Like, you need to have that time where you've actually been in that role, doing that job, showing up and providing value over
Right.
time.
Absolutely.
To really create that trust factor. And then of course doing your moms and dads, which we have our own language. So that's
I think
meeting
we should
outside
have
of
an RGA
meeting.
drinking show.
See, now Mark didn't like when I made dads discussions after drinks. I don't know why. I thought that was a great idea. I mean, me and Ryan have done that a few times. I mean, it seems like it's
why
a
can't you do a
natural
Bob?
outgrowth.
Why can't you do a Bob and have bourbons after breakfast?
Right.
Yeah, there you go.
I mean, to someone that's going to work for them.
That-
That
that will
may not be
work.
me or you, but it might work for them. So
Yeah.
We are so not politically correct on the show.
No, we're
I
not.
just,
Okay.
that just hit me. Okay, so other than creating our own drinking groups, so we've got the business council, we've got the women's council, we've got RGA Speaks this Wednesday, we've got our newly relaunched virtual meeting is every Friday morning at 8:45 a.m. Goes from 8:45 to 10.
What day?
Fridays.
Fridays.
So we had a morning, afternoon, and an evening, and we decided that we wanted to consolidate those and really bring them closer to our chest as far as like with our focus.
Right.
Because we're going to be rolling out by the end of the year a virtual membership, and that's going to be key to our growth strategy, is really like attracting people in and giving them an experience that they're not used to, even from a virtual meeting. So
That's good.
yeah, that's
Because
pretty,
I hate virtual.
yeah.
I
it's-
am such a if the only reason I use Zoom is to talk to people like Ryan the way we're doing right now.
Right.
Other than that,
Yeah.
forget it. I'm
Yeah.
done, man.
I know, and they were doing this cool thing with like an interview in the meeting, and that was nice, and it worked well during the pandemic because it gave somebody the spotlight for a while. But what it missed out on is the business builders, because
Yes.
that's where they took the time from. And now that the business builder is such a core element of what we're trying to do, I mean, the educational experience in RGA is just blowing up. I mean, the last person that I interviewed, she literally, it was one of the main reasons why she joined. Right? Because it was like, oh wow, this is awesome.
That my smiling personality.
That and your smiling personality. There you go. There you go.
I have a very cool cafe. That's really why she came.
Yeah.
I'm just saying right now.
She said Gandalf said join, I joined.
Gandalf said, yeah, that's
Anybody
It's pretty
seen
much how
that
Matt
show?
got me.
My
It's
God,
okay.
it's great.
it. Yeah, exactly. So
Matt's like, oh, Ohio, you must join. You have no choice. I said, oh,
Right,
okay,
No
thanks.
choice. I'm like, you're one of my people. You have to join. It's going to be really funny when we take RGA back to Ohio. I'll just be like, all of you are mine.
Yep.
Join.
oh,
Yeah, so fun.
That'll be easy.
That'll be easy. It'll be a piece of cake. So, got lots of stuff happening. Ryan's a key element to that. Tell us a little bit about Champions Mortgage. We got a couple minutes left. When it gets down to about a minute, I'm going to try and wrap things up here. But tell us a little bit about Champions Mortgage and what's going on there and how long they've been in business and all of that jazz. And I know it's family owned and operated, so.
Yeah, for sure. So we've been around just about 11 years. So in the grand scheme of things, we are a little bit younger to the game than your Rocket Mortgage out there. My brother-in-law is part owner of the company. My sister-in-law is my branch manager. So family get-togethers just end up turning into work meetings, as we always laugh about.
Of course.
Like I said, he kind of brought me in, and then about 2 months after he brought me in, he brought her in and was like, she's a former teacher, so it was a pretty easy transition for her to just educate people into how to buy a home and what the process was. So it's been an absolute blast doing that. We also just launched our own CRM company, and so that's for originators out there. We can talk about that offline. I'd love to just, if you have a question about our new CRM, shoot me an email or give me a call down. I know they have my information down there in the corner, just to help build originators' pipelines and to help change their lives more than one deal at a time. We're trying to set it up to where you can build a nice setup to where you'll have mailers and all sorts of great campaigns. So, but yeah, Champions Mortgage has been an absolute blessing to be a part of. Being through a lot of different growths and movements. We're also part of the Florida Association of Mortgage Professionals. So, it's a great group to where originators can go and have a conversation and not have to worry about trying to sell each other on anything. So it's an absolute blessing to be a part of a family-owned and operated company for sure.
Awesome. Yeah, and that is the truth, though. Let me tell you. You get into a family business like that.
No, you can't work with family.
Oh.
I cannot work with family. I've tried. Ask Rob. Rob will tell you we do not get along. I'm just saying. I'm different though.
I guess that's what also another tad is to add to RGA, right? It's like family, right?
It is like family.
Matt knows Wednesday mornings I'm going to be there for coffee, bright and early. I'm going to order my pancakes. Mark's going to talk about my tattoos. Yep. It's how it always goes, right? And when that Mark's there and the other Mark's leading, we never end on time. I mean, but it's so much fun to where doing business is just the micro of it all, right?
Yeah.
The macro of it is just having those relationships to really, I think one of my first text messages on Friday was from Matt, right? Hey man, how'd you make it through the storm? That's the difference in RGA. Yeah. So
hey, I sent out a few of those. Okay.
He was like, hey, I just want to make sure you're not dead.
You got one of them too, John. Don't act like you didn't get one of those messages.
I felt loved.
Well, John was actually. You didn't tell me yet. You were planning on storm chasing. You'll have to tell me offline because we've got 30 seconds left.
To close this show out today.
The good news is I'm a lot closer than I was the last podcast because we are literally counting down the moments. Whereas last time I kind of was like, oh, there's 30 seconds left. I guess we can take it from here, guys.
Left him on his own.
Yep, that's what happened. So, guys, listen for everything RGA, including how to get in contact with Ryan or John or myself. You can join us at rganetwork.net, and we'll see you guys at a meeting soon or at the next podcast episode.
See you later.
We'll see you soon.